Good morning, guys, and welcome to a new episode of The Reason You Are Broke. I'm your host, Ida, and I'm so glad you're here today. Today on the show, we're going to be talking about three main things: your tax free savings account, your RRSP, and things about what you should be contributing to essentially. So it's questions that some of you, my listeners, my viewers, have sent into the show, and that's what we're going to be discussing today. But first, there's an announcement I think I really have to make. If you follow me on Facebook, you would have already noticed that we now have a podcast, the Reason You're Broke podcast. I'm going to tell you about that during the show, but today it's really about those questions that you guys have sent into the show. Thanks for tuning in. Let me know where you're watching from. And please, as usual, share so that people who might benefit from the information that we're talking about today can see it in real time and hopefully ask their questions. Today, it's the questions I'm going to be answering. I think they're very relevant to lots of people because most people really don't know the difference between the tax-free savings and the RRSP, and they're so confused about what they should be contributing their money to. So stay tuned, share as you join us, and I will be back with you in a couple of seconds. Thank you for being there. Like I mentioned, we now have a podcast. It's available on several platforms. It is on Anchor, it's on Spotify, it's on Google Podcasts. It's also available on Breaker, it's on Pocket Cast and Public Radio, Radio Public. More platforms are coming soon, but we have a podcast. And what I'm excited about for the fact that we have a podcast right now is because you can actually the podcast episodes are very similar to what we have on the regular live show episodes, okay? But the good thing about the podcast is that you're able to listen to that in your car, and it's compressed. It's a shortened version of everything that we're talking about on the show. But the other good thing is that you're able to send in a voice message directly on the podcast. And you know what? I could take your question directly there and I'll respond to it. So go sign up. If you haven't signed up on the podcast, please subscribe. The content might be different. Definitely, I'm going to put some other things there that I don't do a full episode on a live show. So that said, please go ahead and share and let me know where you're watching from, and I'm going to get started right away. So the first question that came in was about what is the difference between a tax-free savings and an RRSP. If you're in Canada, of course, you've heard those words. If you're in the US and you're watching, it might be a strange language to you, but it's comparable to what you guys have there as the 401k, the Roth IRA, and the traditional IRA. Today, I'm focusing on the Canadian. So US, I might do another episode for you guys, but this today, it's about the Canadians in the house. Your RRSP, what it stands for, first of all, is the Registered Retirement Savings Plan, and your tax-free savings account, which is the TFSA. Those are the two things. Those are really retirement vehicles that the government has put in place for you to save towards retirement. And those are just big words. So I'll break it down for you, because when I want somebody to explain something to me, I want them to explain it to me in a way that I would understand. Explain it to me like I'm 5 years old. So that's what I'm going to do today. The real difference between those two things, the RSP and the TFSA, it's in the tax treatment. It's in how the money that grows in those accounts are treated for tax purposes. Okay. So I'll take first the tax-free savings account. The money that you put into your tax-free savings account, it grows tax-free. So whatever you put into that account, it's going to grow tax-free, and when you start reaping the benefits of it, when you start pulling the money out of it, you're not paying any taxes on it anymore because you already paid taxes on the money going in. The RRSP, on the other hand, the money you're putting into the RRSP, you have not paid any taxes on it. So at the time that you're going to be withdrawing the money from the RRSP, that's when you will be paying your taxes. And there are times when you shouldn't just pull out money from your RRSP just for the sake of pulling money out. It's there for retirement. It's meant for retirement. So the government has made it in such a way that they are deterring you from pulling out money from your RRSP. So if you pull out money from your RRSP before retirement, essentially, you pay penalties and you pay the first thing is you pay penalties, but you also know that when you're pulling out that money, because you hadn't paid taxes on the money going in, you will be paying your taxes at this time. Let me break it down for you again. Let me break it down in a really, really, really simple way. I'm going to use this board. I'm going to use this board that I have right here. And I want to explain it to you in terms of a tree. Okay, so imagine that I'm going to pretend I'm a really, really good artist. So picture this tree as something that you are planning to harvest from in your retirement. So let's pretend that this is a really good mango tree and those are your mangoes hanging all over the tree. Okay. If this were a tax-free savings account, pretend that the money that you're putting into this tax-free savings account, there's some seeds. Okay. This seeds in a tax-free savings account, you have paid taxes on the seed. You paid your taxes on the seed. So when you plant the seed and it grows into this tree, you're going to be harvesting the fruit. But because you had paid taxes on the seed, the tree grows tax-free. And whatever you harvest from this tree, you will never have to pay any taxes on them. For the simple fact that you paid taxes on the seed. I hope that's very clear. If you're watching in the audience and you don't understand what that means, please let me know. The tax-free savings account, you paid money on the seed going in. So it grows tax-free. When you harvest from this tree, you will never pay taxes on it because you had paid money on the seed going in. On the flip side of that is your registered retirement savings plan, the RRSP. Again, picture the money you're putting in there as seeds, okay? This seeds you're putting in your RRSP. When you bought the seeds, you didn't pay any taxes. The seeds, you didn't pay any taxes on them. So you're going to plant the seeds. It's going to grow again into another tree. But at the time you harvest the fruits, that's when you're going to be paying your taxes because the seeds, you didn't pay any taxes on them. So like I said, the main difference between your RRSP and the TFSA is in the tax treatment when you get taxed. TFSA, you got taxed on the seed. However it grows, that's yours. Nobody's coming to take anything from there. RRSP, you did not pay any taxes on the seed. So you will pay taxes on the harvest. That's the main difference. That's the main difference. When you're watching this in replay, if you don't understand it, pause, go back and see the explanation I've given for this. Okay, I'm hoping you understand that's the simplest way I could put it. And so just think about it. Tax-free savings, you pay money on the seed. RRSP, tax-free savings, you pay taxes on the seed. And RRSP, you pay taxes on the harvest. Okay? That's the basic explanation for it. And I'm hoping it's super clear. And I'm hoping that really clarifies for you what the main difference is. So the question now that the viewer sent in is, what should I be contributing to? Should I be contributing to tax-free savings account or to an RRSP? That depends on your goals. I could explain it in general terms, but you need to sit down with somebody who understands your situation to help you see the big picture in your personal finances so you can take the right decision for you. You're the only person that can take that decision. All I'm doing is giving you the information that you need to make the right decision for you. So, should you be contributing to a TFSA or an RRSP? That depends on you. What happens when you contribute to an RRSP? Say if you make an income of $100,000 in 1 year, okay, that puts you in almost like a 50%, almost like a 45% tax bracket. If you want to reduce your taxes right now, your choice would be to take some of your income and put it in an RRSP. Say you make $100,000 and you put $25,000 in your RRSP. It's going to be considered that you only made 100 minus 25. So it's going to be considered that your income for the year was only $75,000 because you took out $25,000 of that income and put it to your RRSP. In that case, you're only going to be taxed on $75,000. I think I'm going to use this board again to explain the other part. You made 100K. You put 25K in your RRSP. Your income then is $75,000. This is what you're going to be paying taxes on in your RRSP. So instead of being at the 45%, I think, tax bracket, depending on what province you're in, there's the federal taxes and the provincial taxes, but combined, you're probably around 45% tax bracket. If you put your money in there, now you drop down to a $75,000 tax bracket, which depending on what year you're watching this in and what province you're in, your tax bracket is different. But the main thing that the RRSP does right away is it reduces your income by that amount of money that you've put into your RRSP. So you're only going to pay taxes on this amount. If you chose, on the other hand, to put this, you still had $100,000 in income, and you chose to put $25,000 in your tax-free savings account. This does not reduce your income. Your income is still $100,000. You're going to pay taxes on $100,000. And after paying your taxes, whatever money comes to you, you chose then to put this $25,000 in your tax-free savings account. You have already paid your taxes on this $25,000. Your net, overall, you're going to have less money to spend. But those are things you can look at a different time. But if you're putting it in a tax-free savings, like I said, it did not reduce your income over here, the salary or whatever income you made. It did not reduce your income here. You're putting your $25,000 in your tax-free savings account, and it grows into this tree. You're gonna harvest. Down the road, when you're harvesting, you will never pay taxes again because you had paid on this 25K. Your RRSP, on the other hand, because your income had come down to 75,000 by you putting in 25 into your RRSP, you only pay tax on 75. So guess what? This 25K down here grows, and say it becomes $100,000 or $200,000 with compounding and everything. When you finally harvest it, if you go and pull out that $200,000, you're going to be paying taxes on $200,000. You're not paying tax on 25 anymore. But I only put 25,000 in. Why do I have to pay taxes on 100 on the full harvest? That's how the RRSP works. 25K in, it grows into whatever it grows into. When you harvest it, you pay whatever taxes you have to pay at that time. So understand the difference and make the right decision for you. I can't tell you to go and put money in your RRSP or to put it in your tax-free savings. But if your goal is to reduce your taxes now, put it in your RRSP. If your goal is to reduce your taxes now, like I said, put it in your RRSP. But if your goal is to grow your money tax-free, put it in a tax-free savings account. You pay your taxes now, it grows, and whenever you harvest, you don't have to pay any more taxes anymore for that money that was in the tax-free savings account. I hope that clarifies it for me. I haven't seen any comments yet. If you do have a question, please let me know. Or if you do understand, just give a thumbs up and let me know you understand what I've explained, because there's no point in me explaining this if you don't understand it. So just let me know that it makes sense what I've explained. And if you have a question, if you need further clarification on what the difference is between your RSP and the TFSA, let me know. Put it in the comments. So with that said, let me go on to the next information about the tax-free savings and the RRSP. How much can you contribute into your tax-free savings account? The tax-free savings account, so it's an account that started in 2019. And every year they give you an amount. Well, they don't give you money, but you have a contribution room of how much you're allowed to put into that tax-free savings account. In 2019, 2019, 2020, 2009, I typed that wrong. So 2009, 2010, 2011, 2012, the limit was $5,000. 2013 and 14, it was 5,500. 2015, the limit was 10,000. 2016 to 2018, the limit was 5,500 again. It went back down. And then 2019 and 2020, that limit has been $6,000 of how much money you can put into the TFSA. So cumulatively, from when it started in 2009 all the way to the end of 2020, cumulatively, the room you have in there is 69,500. That's how much money you are able to put into a TFSA for it to grow tax-free. I think the limit in 2021, I haven't yet seen the information, but I think the limit for 2021 is also going to be 6,000. But I read somewhere that they're going to index it and increase it by $500 or round it to the nearest $500, depending on what the inflation rate is. But that information is always available on the CRA website. So if you want to know what the limit is for a given year, for this year, for example, if you go on the website, you'll probably see the information there. Who is allowed to contribute to a TFSA is anybody who is a Canadian resident and is 18 years and above. So all of us, you guys watching right now, you should all be eligible to contribute into your TFSA. If your goal is to invest your money in the TFSA to make it grow tax-free, that's what you should be doing. That's how much money you're allowed to put in there for now. There is a limit also because there's so much tax advantage to it, right? So for the fact that your money can just grow and you never get to pay taxes on it ever. So the limiting how much money, because I don't want to make it unfair on certain kind of people and things. So whatever, there's so many things about it. You can go read on it. But my goal today is just to make you understand what it is, what you can do with it, so you can use it to your advantage. On the other hand, the RRSP, how much you can put into your RRSP depends on your income. If you have earned income, so you have a job or so you get a salary or you get business income, self-employed and things like that, that's earned income. Your contribution room for your RRSP is 18% of how much your income was for the previous year. And there's a calculation to it, plus or minus some pension adjustments. It's all very, there's a lot of information in there, but the basic thing that you need to know, the basic guideline is how much income did you make last year? So 18% of that is how much you're allowed to put into your RRSP this year. But also what you need to know is that it accumulates. So if you had like $1,000 RRSP room in the first year and you didn't use it, and you get like a $5,000 room in the second year, now you have a cumulative $6,000 room that you can contribute in there. So if you want to contribute in this year, whatever your contribution room is, that's how much money you can put in there. There is a maximum. You can't go every year to tell you how much the max is, because you don't want somebody to say make $100,000 and go put $100,000 away in an RSP and don't pay any taxes. So there are guidelines, there are restrictions on how much it is. In this year, it's about $27,000, $27,300, which is the max you can put into your RSP. So 18% of your previous year earned income, plus or minus the adjustments. But if all of that amount goes to more than your room or to So long as you have the room, you can put in more than the 27,000. But if you've maxed out your room, then every year you're just having whatever room is available there. Let me know if that's not clear. In my head, it's clear, but if it's not, because I know those things. So if it's not, let me know, okay? Let me know so that I can clarify it. That's the purpose of this episode. This episode is to explain those questions that people have asked, those topics that people want to understand so that they can make better decisions for themselves. Now, back to the question that was asked to me, or the second part of the question. How can I make sure that I'm not paying too much taxes while contributing? No, not that way. So the question that came to me was really like, working overtime. So I'm afraid of working overtime and working extra hours because I think I'm not going to get a tax refund. I'm going to have to pay back at tax time. What do you have to say to that? That was a question that came. So again, I'm giving this as general information. Working extra hours, yes, you're going to increase your income by the fact that you're working extra hours. So some places when you do extra hours, it goes to like time and a half or 2 times your regular pay per hour. So you know that when you're doing all of those extra hours, your income is going to go a lot more higher, and people are generally afraid of doing that extra because they're going to have to pay back at tax time. But with your understanding now of what the TFSA and what the RRSP is, and with your question of should I contribute to my TFSA or to my RRSP, if you are afraid of paying more taxes, or if your hesitation in doing more hours is because you're going to pay back the government, you probably have a contribution room in your RRSP. Put the money in your RRSP. So instead of having to pay more taxes to the government, you're paying yourself for your future. You're putting the money aside towards your retirement goal. And for the most part, if you max out your RRSP, for most people that I've seen, when they kind of max out their RRSPs in the year, they actually do get a tax refund. You will get a tax refund, and that money, then you can take it and put it towards whatever project you were working those extra hours for. So if you're working your extra hours to say you want to pay off your mortgage early, but you're being counterproductive because the more you work, the more taxes you're going to have to pay. Do the work, get the extra pay, take it, put it in your RRSP, you reduce your taxes, and then when you get your refund, that refund then goes to that goal of paying off your mortgage early or putting it into your tax-free savings account. You take the same money and you do two things with it. You contribute, say, 25,000 to your RRSP. It reduces your taxes, it reduces your tax bracket, then it reduces your taxes. You get a refund, you take the refund and you turn around and invest the money in your tax-free savings account. Now you're putting money you've already paid taxes on, the seeds you already paid taxes on. You're putting that into your tax-free savings account, and that's going to grow tax-free for you. So that's information that once you have that information, you're able to make the decisions that work best for you. And I won't answer that question for you. Where should you put your money? Again, it depends on your goals. It really, really depends on your goals. Okay. So those are the two main things, or the three main things that were like the questions today. If you do have a question, I'm seeing in there, I don't see anybody having any questions right now. Guys, let me know if you can see and if you can hear. I haven't seen comments, and I don't know if you guys can hear me or if you can see me. The next question was, should I borrow money from my RRSP? Should I borrow money from my RRSP? Heck no. There are situations that allow you to withdraw money from your RRSP. For example, for the home buyers plan, if you're looking to buy your home, they allow you to borrow money from yourself. So you can take money from the RRSP to put it towards your down payment on your mortgage. That's allowed. But my preference is to save up for the mortgage. But it's your choice. You asked me the question, should I borrow money from my RRSP? My answer to you is no. The situations that allow you, the first one was for the mortgage to take it and put it as a down payment towards your home. The second situation that allows you to borrow money from your RRSP is for the learning plan. It's a lifelong learning plan. You can go and read up those things on the CRA website. But those are the main two things. One, for your home, to buy your first home, and second, it's to go to school, a lifelong learning plan. There are specific guidelines on what is allowed and what is not allowed. Do your research, go and read up the information, and make sure you're doing what works for you. Don't say, Ida told me I can withdraw money for this. No, I'm telling you, those are the situations that are allowed. First time home buyer and the lifelong learning plan. Those are on the CRA website. Look up the information and see if you can do that. Besides that, if you're pulling out money from your RRSP, again, remember the money in your RRSP, you had not paid any taxes when you were putting that money in. You put in pre-tax income into your RRSP. So if you go and pull out that money from your RRSP, then you get to pay taxes when you pull it out. So if you have money in your tax-free savings and you say, I want to go withdraw this 25K and you pull it out, you're not getting 25K. You're going to get 25K minus penalties because you pulled it out before retirement, and minus taxes because you didn't pay taxes before. And they're going to send you a tax slip, which you would then have to include in your income in the year in which you pulled out the money. And then it's very counterproductive, counterintuitive. And in the same breath, if you had put that money in your tax-free savings account or in your RRSP and that money was growing, when you go pull it out, then you're stopping that compound interest, you're stopping that growth that was happening in your RRSP or in your TFSA. So to me, if you ask me, should I borrow money from my RRSP? My answer to you is no, don't do it. But again, it's your choice. Know the difference, know what it means, and then you can make the decision for yourself. If it's something you really, really want to do, you can go ahead and do that because you have made that decision, knowing fully well the implications of any of those things that you're doing. Okay, so those are the main things. Now I want to tell you guys about when you put your money in your RRSP or in your TFSA, that money in general sits in a savings deposit. It sits in a savings deposit until you give an instruction to the bank to invest the money. When you put your money in, so that 25K that you decided to put into your RRSP or into your TFSA, when you put the money in there, the money sits in a savings deposit. Like the seed, it's like you take your seed and you go and give it to somebody and the person says, okay, I'm going to hold the seeds for you. You have to tell the person to plant the seeds. You would think that the fact that you've given a person the seed means they're going to plant it, but no, they won't do it until you tell them to go and do that. So check on you. If you have a TFSC or if you have an RRSP, go online and check. Go and check and see if your money is sitting in a savings deposit or if it's being invested. For the most part, it's just sitting in the savings deposit as those seeds that you've given them. Now you need to give instructions. Please plant my seeds. So that means you're going to have to call up your bank and you're going to have to tell them you want to invest your money that's sitting in your RRSP savings deposit. That means they will ask you a series of questions. There's no right or wrong answer to any of those questions. What they're asking you is just because they want to know your behavior. They're trying to set up your investor profile. They want to know how you would react to certain things that are happening in the market. So they're going to ask you questions, general questions that you would already know answers to. First of all, they would ask you your income, where you work and things like that, how long you want to keep the money for and all of those kind of things. But the most important questions they would ask you is not exactly this, but in the lines of, if the market is going down, or if you open your account and you see that you put in $25,000 and when you open it, you see it's down to $20,000, are you going to pull your money out or are you going to leave it in there? Again, there's no right or wrong answer. But your answer to that question tells them the kind of investor that you are, the kind of person that you are. And your response to that question is going to tell them which kind of investments to suggest to you. So if you tell them, for example, that if I go into my account and it was 25K and I see that the investment is down to the value, market value is down to 20K, if I'm going to leave it in there, then they see that you're the kind of person who is not easily panicked by what's going on. And it's probably a good idea for you to invest in certain kinds of things. For example, they might say, I don't want to call names here. I don't even want to say, well, the options are like stocks, bonds, mutual funds, ETFs, index funds, and all those things. You will have to do your own research to see what works for you. But let me just use the common example, which is mutual funds. I'm not suggesting you go buy mutual funds. I'm using that as an example. So if you call the bank and they set up your investor profile and they see that you're the kind of person who is conservative, for example, they will suggest to you very conservative mutual funds. If they see you're the kind of person who is aggressive or the kind of person who is looking to make the money grow, regardless of the risk, you're okay with taking certain kinds of risk, they would suggest to you then to put it in like an aggressive one, which has more interest, more returns, more returns essentially coming. So take this information, go talk to your bank. They will set up your investor profile, and depends on what you tell them, depends on what you're comfortable with. Don't go and tell them things because I said this is the right way or the wrong way. There's no right or wrong way. Tell them things that you know you're going to do. Because at the end of the day, the whole money thing, it's a behavior thing. So you might tell them, I'm going to put the money, even if it's going down, I'm going to leave the money in there. That's what you might say. Your mouth is saying that, but your head doesn't believe it. So when you turn around and look and you see your money is going down, you will go and pull it off. But that's not what you told them. What you told them is what they set up. But what you end up doing, it's what's going to make you now to get to lose money on your investments or to make money on your investments. Okay, so do what you tell them, what you know you will actually do. Don't tell them what you think they want to hear in order to set you up a kind of investor profile. It's your money. If you lose the money, it's going to be you suffering. It's not them. They're going to make the commissions regardless. So set up what works for you. Give the answers according to your behavior, according to how you would behave. And it will really help for you to understand how those funds work and how those stocks and bonds and how those things work. It's good for you to understand how those things work, so you know when you see it going down, it doesn't mean that you're actually losing your money or not. It's until you go and pull out that money that you've lost it. Because if you put in 25K and you go there and you look and it's down to the value of 20K, when you pull it out, you're actually only going to pull out 20K. Then you've lost the 5. But if you left it alone and the market went up and down and finally went back up, you haven't actually lost the money. It's still there. So you need to understand it. You really need to understand it. Read a book or something. Or you can ask me other questions. I could answer them. I'm not an investment advisor. I'm not a financial advisor or any of those. I'm your coach, and I'm telling you the things that I have learned, the things that are out there, so that you can be a more informed consumer and you can make the decisions that are right for you, because now you know how those things work. Question from the audience? What's the difference between RRSP with the bank and RRSP with the FTQ? Oh, awesome. So the FTQ is something which it's only for Quebec. The FTQ. Maybe the other provinces have something that's similar to that. I haven't done that research, but I'm going to explain what the FTQ is and what's the difference between that and the RRSP at the bank and the RRSP at the FTQ. Okay, FTQ, first of all, it stands for Fond de Solidarité. FTQ. So it's a Fonds de Travailleurs du Québec. I think that's the actual word for it. I think it's Fonds de Travailleurs du Québec. But it is how do I put it? It's like you investing in the Quebec economy. You're investing in the Quebec economy, and you can get it by yourself or you can get it through your employer. But in terms of what the main difference is between that at the FTQ, the RSP at the FTQ and the RSP at the bank, is that when you contribute through the FTQ, you get an additional 30% tax tax credit refundable tax credit. You get an additional 30% tax credit for contributing through the FTQ. The maximum you can benefit from on the tax credit is $5,000 in a year. So you can probably put more than 5,000 into your RRSP at the FTQ, but the cap the credit at the $5,000 limit, meaning that if you contribute $5,000 into your RRSP at the FTQ, first of all, you get 15% back on the federal side and 15% back on the Quebec side, which together makes 30%. So 15% of your 5,000, it's $750, which you're getting back. You put in 5K, you're getting back 750 from Quebec, you're getting back 750 from federal, in addition to whatever deduction your RRSP is going to give to you. Let me go back to my little board here. So if I don't want to erase this. Anyway, if you want to see all of those explanations, you can just go backward and you would see all what I explained on this. So if, for example, you're putting, so this is all RRSP. Okay, so in the FTQ and at the regular bank, for example, at the FTQ, you get 15% federal credit and 15% Quebec credit. So that's a $750 with the cap of $5,000, okay? The cap of $5,000 here in the FTQ. You get $750 from federal and you get $750 from Quebec for putting your money through the FTQ. In addition to this $5,000, which is going to be a reduction on your income. Say your income was 100K. Your income was 100K. You decided to put 5,000 through the FTQ and 20,000 through the bank to make your 25,000. Your income still comes down to $75,000. But first, $750 comes back to you tax-free, and another $750 comes back to you tax-free, which on this side you don't get. If you had put all of it in here, you don't get the $750 which came through the FTQ. So you can get it through your employer, or you can get it directly on your own. If you go on the FTQ website, you will get all the information there. You have to sign up through direct deposit, and they pull the money directly out of your bank account every month or every other week or whatever schedule you choose. They would do that automated. The max, unfortunately, is $5,000 that you can put in there, because that you can not what you can put in there, but the max that would give you entitlement to this $750 each, 15% federal, 15% Quebec. The max that's going to give you entitlement to that is $5,000. But how much in total you can put in there, go check on the FTQ. It might be like $12,000. I don't remember, but don't quote me on that. Maybe it might be that. And again, how much overall you can put into your RRSP depends on what your contribution room is. If you want to know what your contribution room is, look at your notice of assessment. Your federal notice of assessment would tell you what your contribution room is for RRSP. And if you want to know what your contribution room is for the TFSA as well, I'm not sure if it's on the tax, if it's on your notice of assessment, but it is on your CRA My Account for individuals. So if you log into your CRA My Account for individuals, that's the name, My Account CRA. If you log in there, you would see information on what your TFSA contribution room is and things like that. So you have a big picture and you can make decisions from a place of knowing, not from a place of somebody told me at work, in quotes, that if I work overtime, I'm going to pay more taxes. Yeah, overtime takes you to a higher tax bracket, but it doesn't mean you're going to pay more taxes. If you understand all those things, you can make them work for you. So you're not paying more taxes than you have to. Your obligation is to your family. Your obligation is to your first obligation is to your family. Your first obligation is not to the government to pay more taxes than you have to. No, pay the taxes that you're required to pay, but don't pay any more than you have to. And these are the things that when you know them, When you know all of those things, then you're able to make the right decisions for you. Okay. I hope this explains it, guys, for you. If you don't understand, please put a question in the comment. If you're watching this on replay, still put your questions and I will explain further. I might reach out to you in person or whatever, or you can reach out to me in person. But these are things that your accountant essentially should tell you. So if your accountant is not telling you all of those things, I don't know. Okay. Yeah, that's that. So in addition to the FTQ, which gives you the 35%, the 30%, I'm sorry, FTQ is 30%, the federal and Quebec. There is another one, which is Fondaction du Québec. I'm not sure if that's what Femi is asking here. Is the FDQ the same as the defined contribution for retirement? FDQ, is that Fondaction you're referring to? Just clarify. I don't know if you're talking about the Fondaction du Québec, but if that's what you're talking about, it's a similar principle. But the Fondaction gives you a little bit more. The FTQ gives you 30% back. The Fondaction gives you 35%. For the Fondaction, it gives you 35% credits. So from your 5K that you're putting in there, you're already getting this back. Or so if you're doing it through payroll, it reduces directly how much taxes you're gonna pay. So if you're a person that's deciding to put the $5,000 and they're spreading it per pay period, it ends up being like $192 if you're paying. If you're doing a biweekly payroll, right? Your $5,000 comes out to like $192 per paycheck, which you're contributing to the FTQ. But net, the effect you would feel reduction in your paycheck is just like $60. Think about that. You're putting $5,000. So you're deducting $192 from your paycheck, which is a contribution that's going to the FTQ. But the net effect you feel on your paycheck every single month is only about $68. That's like free money. A lot of people don't know this, so a lot of people don't use it. FTQ, if your employer doesn't offer it, you can contribute on your own. Unfortunately, right now they have kind of maxed out on what they are allowing for this year, so it's really hard to change unless you're doing it through payroll. It's really hard to increase your contribution if you're doing automatic pre-authorized deposit directly from your bank account. It's kind of hard. But if you're following them and if you're paying attention to what they're saying on their website, or if you're signed up to their mailing list, you will know when the room opens up again and you will be able to make your contribution into the fund FTQ. This is free money, $1,500, which they're giving. So you're putting 5K, right? You're getting back $1,500 right away, plus whatever your RRSP would have given you, which is the same. Whether you put it in the bank or you put it in here, this part of it is going to be the same. You will get 2 tax slips from Quebec, from the FTQ. The federal, you'll get 2 tax slips from the FTQ. One part of it is showing you how much your RRSP contribution is, and the other part is showing you how much you put into your, I don't quite remember, but yeah, you get an RRSP receipt from them, and you get an FTQ receipt from them, and at the end of the year, they show the returns on their investments just like twice in the year, at halfway through the year. I think June and December, or July and January, they show you. But those things, the money you're putting in with them, they invest it right away. You don't even need to tell them how to invest it. They invest it right away. And you might be asking, why would they do that? Why would they give you that money? What's the catch? They're giving you this because they want to encourage you to invest in Quebec companies. Like I said, this is only for Quebec. Maybe the other provinces have something similar. I haven't seen that yet, but you might want to look into it. It's gonna be a labor sponsored fund, because these are funds that are available to workers. So, what's the catch? They just want you to help the economy. So this money you're putting in here goes directly to fund Quebec companies. So as a thank you for your contribution towards that, they're doing this tax credit for you, which goes now to reduce your overall tax that you would have been paying. So when you know those things, you realize that the taxes you're paying too much tax. Financial intelligence is that thing that helps you to pay less tax, or to know how to arrange your affairs in a way that you're paying just what you need to pay. You're spending just the money you need to spend. You're putting yourself you're putting yourself first, but without putting any other person in a detrimental position, because right, you understand these things. And yeah, so Femi, thanks for your question. The FTQ is very similar to the Fondaction. Fondaction is 35% they're giving you, but FTQ is 30%. Follow-up question here: can you contribute to both funds? No, you cannot contribute to both funds. You can either contribute to the FTQ or you can contribute to the Fondaction, but you cannot contribute to both. So you just need to look at the two and see which one aligns better with you, and then you make a choice. You make a choice. The obvious choice might seem to be the Fondaction because it's 35%, but that's not necessarily true. Go into the website, look at it, look at what refunds, or what not what refunds, what interest returns you're getting on your investments that you're putting in each of those things. Because again, you're investing in Quebec companies, so you want to look and see what returns you're getting depending on what fund you're contributing to, and you can make a decision from there. Okay. No, you cannot contribute to both. They're both labor sponsored funds. You can get the refunds, the 750, whatever. You can get both that from both of them. Question here: what's the difference on return on investment between the FTQ and the Fondaction? it is it's higher on the FTQ than the Fondaction. I don't know the percentages, but when I was reading one of their reports on both sides, I saw that the FTQ had a higher return, because I know of a person who put in like $4,000 in the FTQ within like a 4-month period, because the person started contributing towards the end of 2020. After hearing about all of this information, the person decided to sign up for the FTQ, and they put in close to close to $5,000. And in that short period, they made a return on investment. They made a return on investment of more than $1,000. So think about it. You put in your money, 5,000. Let's say you even put up to $5,000. You put $5,000 somewhere, and within 4 months, that $5,000 makes you $1,000. So you got like $1,000 extra on that. I didn't get any feedback from people on the Fondaction, but the FTQ seems to have a really good return on investment. Again, go and do your research and check and see what works best for you. Thank you so much for that question, dear husband. Any other questions? I would love to take them. Let me know. I'm really hoping that this information is useful to you guys. I'm hoping that people are getting value from all of this. Yeah. Let's see. So the very important thing that you need to take from this today is: check first. Don't be afraid to make more money or to do overtime and earn extra income because you're thinking that you're gonna have to pay back at tax time. Don't be afraid to do that. It's really coming from a place of fear and a place of ignorance, instead of coming from a place of knowing. Do the extra hours, make more money, take advantage of those tax vehicles that are available to us. Sign up for an FTQ or Fondaction or any of those things. Or if you just want to put your money in an RRSP and a regular one at the bank, those are options that are available to you. But each of those things do have limits. You have a maximum that you can contribute to either of those. Again, your RRSP limit, you're going to see that on your notice of assessment. You will know how much you're allowed to contribute in there. If your income level, if you're at the low, kind of the lowest tax bracket, so if you're making less than $25,000 in a year, it doesn't really make sense for you to put money in an RRSP to reduce your taxes, because you're not reducing your tax bracket at all by putting money in an RRSP. So depending on what your goal is, if your goal is still, well, just put money aside in an RRSP for the sake of it, well, by all means, go ahead. But if you're at that level and you want to put aside your money for investment, my suggestion is to put in more in a tax-free savings account, because that way you've paid the tax on that money now. You've paid the tax on it at the lowest tax bracket. That's the plus for you. You're paying your tax on it at the lowest tax bracket, and you put the money in there, and it's going to grow tax-free into that beautiful tree that I made there. If you're watching in replay, go back and look at it, and you would see everything I'm talking about. Or if you just joined us now, I did a drawing of a tree, and I explained to you how you pay taxes on the seed in the tax-free savings, but on the harvest in an RRSP. That should really clarify it for you guys. If there's any other question there, I would love to take it. How do we know the maximum amount to put in the FTC? FTC, I'm thinking that's FTQ. The FTQ, yes, FTQ. How do we know the maximum amount to put in the FTQ? That amount, you're going to see it on the FTQ website. But the maximum amount that's going to give you entitlement for this 30% credit, it's $5,000. So if you decide to put in $6,000, yes, it's going to be considered that you've put $6,000 into your RRSP, but only the first $5,000 will give you entitlement to that 30% credit from the federal and Quebec, so 15 each way. But how much the maximum is, check on the FTQ website, and you would see what that maximum amount is per year. I saw somewhere that it was 12,000, but again, don't quote me on that, but I think that's the max. But you won't get a credit for the FTQ side of things on the full amount. Question here: are there any other investments options after the registered accounts are all maxed out? Oh yes. So these registered accounts are just there to give you a tax advantage, because like I said, it's just a tax treatment that's different between these two accounts, or those registered accounts just give you an opportunity to grow your money in a tax favored account. However you're making that favor you, that's up to you, depending on where you're contributing to. But once you've maxed out those amounts, those accounts, the same banks do offer investment options that you can contribute, you can invest directly to. So yes, you can contribute all the things you're contributing to within your RRSP or your TFSA. You can contribute to those same things outside of the RRSP and the TFSA. So you can still do, if your thing is mutual funds, you can still do mutual funds outside of an RRSP or TFSA. If you think in stocks and bonds and ETFs and EFTs, I keep saying ETFs, EFTs, and what's the other one? Not hedge funds. Hedge funds are, the word is escaping me. Index funds, that's what I'm talking about. But hedge funds is also a thing, but hedge funds is just, it's the hedge that's like, you need to have a lot of money to get into hedge funds. But there's index funds, there's mutual funds, there's stocks, there's bonds. Yes, you have all of those options. Here in Canada, what I've seen being very popular is this app or website called Wealth Simple. And crypto is an option that if you do understand it, yes, you can get into crypto. You can make a lot of money on crypto, as well as you can lose a lot of money on crypto. So go in there with caution and yeah, make an informed decision, understand it. So as you're getting into it, you know what you're doing. But yes, you can do that. I've seen Wealth Simple. And there are probably other ones. If you've known of some other ones, put them in the comment. But Wealth Simple does have this option to do your investments by yourself. They offer the RRSP in there as well. but they also offer like World Simple Trade, offer World Simple Crypto or Bitcoin or whatever that thing is called. They do all of that. So yes, those are options you can do outside of the registered accounts. Thanks for the question. Here, can you save on both FTQ and RRSP to help reduce taxes? Yes. So the FTQ, like I already mentioned, you in the FTQ, you can open your RRSP account inside the FTQ with the FTQ. As well, you can open that at the bank. Can you have both at the bank and at the FTQ? Yes. And even more, you can have RRSP accounts, as many RRSP accounts as you want. There might be a limit, I don't know, but you can have several RRSP accounts at several different institutions. But the thing you need to know is, in total, how much you can put into your RRSP in total is the limit, the contribution limit that you have on your notice of assessment. So you would see, if your notice of assessment says your contribution room for your RRSP is 80,000. If you have 80,000, you can put it everywhere in all your RRSP accounts. 5,000 in FTQ. You cannot do FTQ and Fondaction together. So you can put your 5,000 in FTQ or in the Fondaction if that's your choice. And then you can put the rest at the different banks or at the different investment things you have. You can put it through Wealth Simple, you can put it through wherever. But yes, you can do that to help reduce your taxes. Yes, you're able to do that. Yeah. Thanks for the question. If there's any other question, guys, please let me know. I'm here to answer your questions. If there's a topic you want me to take on in another episode, you can definitely put that as well in the comments, or you can send it to me by direct message on Facebook. And like I said, we also have a podcast right now. It's available on Spotify, it's available on Google Podcasts, and it's available on Anchor FM. It's available in so many places. I'm just gonna put the trailer of the podcast here. I didn't learn about personal finance in school, and chances are, neither did you. No wonder we're so broke. We make so much money, yet we're always struggling to make ends meet and we're living paycheck to paycheck. Financial intelligence is something that is so simple to understand, yet it seems so abstract. On this podcast, we break it down for you. We put the tools in your hands in a way that is simple to understand. If you've not subscribed to my podcast yet, make sure you do so today. Yeah, so on that podcast, like I said, it's kind of like what we have on this show, but it's shorter, it's compressed, and it's put in a way that it's easy for you to listen to in the car. And some of this information you might have to listen to it more than once for you to understand it, for it to kind of be like second nature to you, to remember them when you need them. Like you're feeding your brain with information that you want to remember. So that's what the podcast is all about. And you can definitely send in a voice message on the podcast. If you go in with the Anchor FM app, you can record your voice and ask a question, which I can put in within the episode of the podcast, and I can play it, and then I respond to your question directly in there. I'm really excited about this, and it's available on so many platforms right now: Anchor, Spotify, Google Podcasts, Breaker, Pocket Cast, Radio Public, and it's coming on other platforms. It's soon going to be available on Apple, I hope, on Apple Podcasts. But yeah, that's what we do. It's been an amazing hour on the show. If you have any other questions, I would love to take them. But in the absence of any questions, guys, thank you so much for joining me for this hour. And I'm going to see you next time. If you have a question I haven't answered, send it to me by email or by Facebook Messenger or WhatsApp. I'm on so many platforms. Thank you for being here and have an amazing day.